Another record-breaking run for Bitcoin. This is All About Bitcoin, a show dedicated to all things questions and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. I'm your host, Christine Lee. Let's have a live look at the Bitcoin XBX index right now at $66,806. Bitcoin's still up about 1.7%, so a bit of profit taking since that record high reached on late Monday night. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as a leader in crypto news, events, and data. The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app. Bitcoin giving up some gains after reaching an all-time high of $68,525 around 11:30 p.m. New York time last night during Asia day trading hours. Pantera Capital noting that when Bitcoin retook its all-time high since about October of 2017, it grew more than 3 times as much shortly thereafter. The average increase of the 3 past instances of the average increase of the past 3 instances of making a new all-time high has been about a 9-fold increase over a 166-day period. Glassnode writing in its weekly report Monday that Bitcoin's balances on exchanges continue to drop, while Bitcoin mining hash rate, a measure of the total computational power being used to secure the Bitcoin blockchain, could return to new all-time highs before the end of the year after it plunged in July due to China's crackdown on Bitcoin mining. Looking at some technical indicators, CoinDesk's Dominic Dantes noting that BTC is overbought on intraday charts, although support around the $63,000 to $65,000 range could stabilize a pullback. The 100-day moving average moving average on the 4-hour chart is sloping upward, indicating positive trend strength over the short term. This means buyers could eventually return on price dips into the Asian trading session. And joining us now to discuss is Noel Atchison, head of market insights at Genesis Global Trading, a CoinDesk sister company. Hello there, Noelle. So Bitcoin's new all-time high reached over 68,500. ETH also making an all-time high over $4,800 just hours after that Bitcoin all-time high. What's behind this push?
That's a very exciting question, Christine, and thanks very much for having me. I do have to clarify that these are my opinions, not those of my employer, and nothing I say is investment advice. But as to what's driving Bitcoin, while it may seem like a short-term phenomenon, Christine, it's actually a combination of factors that we've been keeping an eye on for a while. We have the favorable macro environment with inflation expectations becoming more deeply entrenched. Tomorrow we have the US October CPI headline figure, which is expected to produce the highest print since 1990. And all of this is against a backdrop in which it is increasingly harder for central banks to raise interest rates. Also, we have the imminent Taproot upgrade, which is going to make Bitcoin smart contracts more flexible. It's going to make transaction types more private, and also lower transaction fees, all of which should boost Bitcoin adoption. We have the continuing expansion of mainstream awareness. I mean, just last week, Christine, we saw mayors of key US cities committing to taking part of their pay in Bitcoin. That was just mind-blowing. We also have on-chain data, some of which you already mentioned, that show that we have increasing activity on-chain against a backdrop of declining available liquid supply. And finally, Christine, and this is quite important, we have a healthier market than last time we were at these levels with lower leverage throughout.
Wow. Does it feel at all like 2017, though? Because it does a little for me in the sense that the ICO boom feels like what we're seeing with the NFT boom right now. Then regulation came hammering down and we had a crypto winter. Are there any headwinds ahead for Bitcoin?
That's a fair observation. And, in with the NFT boom, I'll throw in some of the meme coins. I mean, just the action that we've been seeing in Shiba Inu recently is quite spectacular. And also, like 2017, we're seeing Coinbase yet again #1 on the iOS App Store. So there are signs of some retail froth. But this is very, very different from 2017. On the one hand, we have institutional interest that we didn't really have back then. We have a professional market structure that we didn't really have back then. We have greater regulatory clarity, which is a much more favorable environment for institutional money to come in. And more importantly, we have the awareness that we've already mentioned. We have people that are much more aware of not only Bitcoin, but of Ethereum, of NFTs, or some of the potential of this technology. And finally, I think this is one of the key aspects to what's going on in the market across all assets, Christine, is the technological progress. The Taproot upgrade is just one example on Bitcoin. We have the pending merge, the imminent merge for ETH 2.0. We have strong growth on some of the other layer ones, such as Solana and Avalanche. It's the technological growth that people are embracing, are developing on, and are accepting more on a mainstream basis that makes this very, very different from 2017 and much more exciting, to be honest, even though 2017 was quite dramatic also.
I'd like to hear your assessment as well as differences in trading geographically, because the all-time high was reached during Asia day trading hours. Do you see any differences in trends between Asia, Europe, and North America?
Nothing particularly clear. We have seen some instances, you probably saw the same chain analysis report that I saw that says that many of the European institutions are going DeFi first rather than piling into Bitcoin. That's largely to do with the different investing culture that we have over here, and I'm speaking to you from Europe. But the difference between Asia and US hours, yes, there is some sentiment change, and there's also a different attitude towards leverage in the derivatives markets. But I think this last one was actually largely due to timing.
Mm-hmm. And do you have a sense of whether or not this push is retail-driven versus institutional?
That's a very good question. It feels still more institutional than retail. Yes, we are seeing some retail activity creep back into the market, but on the whole, it still feels very institutional, not just from the activity that we're seeing in the derivatives markets, but also some of the on-chain activity with some of the smaller transactions. They're ticking up, but it's the larger transactions that are still predominant. One statistic to keep an eye on is the ranking of CME, Bitcoin futures, in the overall Bitcoin futures open interest. Until recently, it was number one in terms of all of the leading derivatives exchanges, largely because of the ETF interest. But it's no longer number one, still number two, which says institutional interest is still strong.
Mm-hmm. And just for the end of the year, any favorite indicators to get any sense of any short-term movement from here on out?
Well, the price, obviously, because many investors are momentum changes. And one thing that an all-time high does is bring a lot of awareness to the industry. So definitely the price, but also I'll be keeping an eye on the active wallets. That's a metric that I personally enjoy watching because it speaks to activity, it speaks to new investors coming in, and it speaks to adoption, which in the end, in the long run, is what is going to drive Bitcoin value.
Noelle, a fountain of knowledge, always a pleasure hearing your insights. Thanks for joining us. That was Genesis Global Trading Head of Markets Insights, Noel Atchison. Coming up, mining for Bitcoin rewards has increasingly become an expensive affair. We'll chat with Compass Mining on how to make it more affordable. Welcome back. Let's take a look at some of our top stories moving markets. Apple CEO Tim Cook owns cryptocurrency as part of a diversified portfolio, he says, but that doesn't mean his company has any plans to put it on the balance sheet anytime soon. Cook telling the New York Times DealBook conference that bit of news there. Separately, Discord CEO Jason Citrin sharing screenshots hinting that Ethereum compatibility may soon come to the popular messaging platform. And European Central Bank Executive Board member Fabio Panetta saying CBDCs will likely be legal tender in the jurisdictions of their issuance, according to a Bloomberg report. However, the status, quote, should not be taken for granted, adding that this status should... Exactly. Well, all right. And Finally, in the early days of Bitcoin mining, anyone could download the Bitcoin software, run it on their computer, verify Bitcoin transactions, and have a chance to earn Bitcoin rewards. Those were simpler times. Now it's much more competitive and it can be cost prohibitive. The monthly average price for the most popular mining rigs, the Bitmain Antminer S19, as well as the MicroBT What's Miner M30, are climbing over $10,000. Nevertheless, Bitcoin mining service provider Compass Mining is trying to make mining more affordable. Joining us now to discuss is Compass Mining CEO Whit Gibbs. Hello, Whit. Thanks for joining us. So, Compass Mining is launching a secondary market for retail mining customers to sell their Bitcoin mining hardware and become the eBay for ASICs, if you will. Tell us a bit about that.
Yeah, today we, at the World Digital Mining Summit here in Dubai, announced that we are launching the Compass Mining Marketplace. So where before we would list machines and people would purchase them for mining Bitcoin or other coins, now people can list directly and we can do peer-to-peer transactions as we have always wanted to do for miners out there. So anyone anywhere in the world who has hardware that they would like to sell is able to register as a vendor on the Compass Mining platform and sell their machines to others who would like to enter the mining space.
What other ways can everyday folks mine for Bitcoin?
Well, I mean, the only real way that you can mine for Bitcoin is to plug in an ASIC and have that hash rate directed at a pool that will then pay you out Bitcoin to your wallet. There is certainly a big push for at-home mining for people who would like to build a small operation for mining for themselves. But more and more, retail is looking to get into mining at co-locations and data centers, much like the industrial players would, because they're able to tap into those economies of scale. Where at home, they're going to pay 10 to 13 cents per kilowatt hour. In a data center, you're looking at 5.5 to 6.5 cents per kilowatt hour. So the numbers are much better in those situations. And we're seeing a lot more people now look at mining as a way that they can get involved in Bitcoin.
Right. And from what I can understand, that you could also join pools as well if you want to do some at-home mining. What kind of rewards can you expect nowadays for something like at-home mining?
So a mining pool is necessary for anyone who is mining, but you still have to have the hardware. You can't just join a pool. You have to have the hardware to connect to the pool. And when it comes to profitability on these machines, for the new generation of machines with the efficiency as it is, at-home miners are generating roughly $20 per new ASIC that they're mining with at home. Whereas if you look at the same ASIC that's placed in a traditional data center, or as most of the Compass customers do at one of our verified facilities, they're looking at anywhere between $30 and $35 a day per ASIC that they're running.
Mm-hmm. I understand that the mining difficulty and Bitcoin hash rate is increasing. How is that impacting your business?
Bitcoin mining is a long play. So we often look at the mining difficulty increase, the network difficulty increase. Every 2 weeks, there's the epoch that shifts and we have a new difficulty adjustment. Sometimes it's up, sometimes it's down. But one thing that you can know is that over the long enough time horizon, Bitcoin's price, as we have all experienced, continues to appreciate. The factor of scarcity makes for mining profitability to continue to increase, even though hash rate will continue to go up. So there are short-term shifts in the profitability on mining, and sometimes it's up and sometimes it's down. We'll likely see the hash rate continue to climb, the difficulty continue to increase for quite a while, but mining will still be a profitable endeavor well into the future.
We do see some governments limiting Bitcoin mining or crypto mining in general because of the energy that is consumed. But do you ever see a time when governments may actually start mining Bitcoin and cryptocurrencies?
So this is a great question, and I think they already are. So we have heard that there are countries in the CIS region that are mining some Bitcoin themselves, using the energy that's being produced in their country. We were made privy to the announcement of a very big development that's going on in Abu Dhabi that will be basically the largest single site Bitcoin mining facility anywhere in the world. And, if it's being established in Abu Dhabi, chances are it is partially owned, some government. So I think that we're going to continue to see that happen. It's obviously a great play for national security. It's very important for Bitcoin. And we're going to see that perpetuate more and more as time goes on.
Fascinating news. Whit, thank you so much for joining us. Appreciate your insights. That was Compass Mining CEO Whit Gibbs. That's it for All About Bitcoin. I'm your host, Christine Lee, and we'll do it all over again tomorrow at 3 p.m. Also join us tomorrow morning at 9 a.m. in New York for First Mover. You're watching CoinDesk TV.